So the last thing we want to talk about in sensitivity analysis is scenario analysis. And that really is just the process of examining the consequences of several possible sets of variables associated with a project. So we're going to take all of our parameters and we're going to set it up into a series or a group of scenarios where several of those parameters may be different in one scenario than another. Now, it's fairly common to use what you would see as your most optimistic outcome, your most pessimistic outcome, and your expected. And you're going to see these terms used again when we get into the PERT evaluations for time estimates and costings. And so in this way, we're going to set up 3 scenarios and evaluate each of them and then say, do we get different outcomes depending on which scenario we might achieve. And so the best case and worst case outcomes can capture the range of the possible. If it can be worse than that or better than that, then you haven't quite described the best case and worst case. Whereas, of course, the most likely outcome is what you're really thinking it's going to be in and around. So easiest way to do this is to look at an example. So we've looked at St. Lawrence Power before with their cogen unit. But in this case, what we want to do is we want to set it up as a scenario analysis of what might be the outcome. And so they've done it in a classic sense. They've done a pessimistic, optimistic, and expected, and they've looked at all of their variables, and they says, what's the best that we could expect in this particular parameter? What's the worst we could expect in that particular parameter? And what's the most likely? And of course, your expected is the one that you've probably already calculated, and now we're going to bound it with the full range of possible outcomes. And then we're going to evaluate each of those scenarios. And so if we look down at the bottom line, we see the present worth or net present value for the cogeneration plant project. Our expected one was, 1.1 million, whereas our most pessimistic outcome, if everything were to go against us, we would expect a negative 234,000. Whereas if everything fell in our favor, we would expect to see somewhere around 2.6 million as the net present value for the project. So to analyze that, when we look at it, basically what it tells us is that the present worth of the cogen plant is not viable if all of the parameters take on their worst case values. So it is in the realm of possible, anyway, that this might not be a viable project. Both the expected case and the best case scenarios lead to positive and very positive viable projects. There's some risk that the cogen project will have a negative present worth. Again, if most or all of the parameters trend towards the worst case scenario. Now, however, one thing to note is that even if the worst case scenario outcome does occur, the loss isn't that big. So you're risking, in an extreme case, a small loss versus fairly large positive outcomes for even your most likely and certainly in your most optimistic outcomes. See, you might ask yourself when you're looking at that worst case scenario, what is the likelihood that all of the parameters are going to be worst case and to the extreme worst case all at the same time to deliver that possible outcome? So the assessment of probabilities and further analysis could be done using decision trees or simulation Monte Carlo analysis, and that would probably provide you a better assessment of the probabilities and the equivalent value of that choice. And so we're going to go there when we start doing risk analysis, but this scenario analysis doesn't give you those probabilities, but it should get you thinking about what those probabilities are. So scenario analysis basically gives us that opportunity to get a feel for the full range of possible outcomes, as well as the most likely outcome, which would be somewhere in the middle, done in combination with sensitivity graphs and break-even analysis. We can start to put together a fairly clear picture of what all of our options are, might be, what might happen, and whether the project itself is viable or the preferred option. So this is the last short video on sensitivity analysis. So just to do a little summary of sensitivity analysis, the one drawback common to all of these techniques is that they don't capture the likelihood. So I talked a little bit about that at the end of the scenario analysis, that it doesn't talk to the likelihood or the probability that a parameter will take on that particular value that a certain scenario will occur. So you could be focusing in on a scenario that is highly improbable and allowing that to skew your decision compared to a highly probable outcome somewhere else. So this information can further guide a decision maker and is often crucial to assessing the risk of the worst case outcome. Probability analysis can be combined with the above techniques. So we have these great techniques. We can incorporate probability analysis into those techniques to introduce a likelihood of a particular scenario or parameter trending to one side or the other. And probability analysis will also lead us forward in our risk analysis and mitigation plans that the project manager would use in case the triggers start to indicate that a particular parameter that has been used is trending one way or the other. So you can see how it's all starting to come together.